Well, good afternoon to all of you. It's, uh, it's nice being in this college. I think I was here a couple of years back for the evening college, and it's always nice to come to Vivekananda. And it's interesting to see that such a large gathering has turned up here this evening for what I would think qualifies as very, very heavy subjects. And I was impressed by the kind of questions that you had put forward to our earlier speaker, which basically showed the kind of depth that some of you bring to the table. Today, across the next 35 odd minutes, I'll talk to you about the future of money, or more importantly, the future of currency. Yeah. I want to ask you a question. You're ready to answer? Okay. I want you to put up your hand in case you have got any cash in your pocket. Do you have any cash, money in your purse, wallet, or just pocket? If you have, please put up your hand. What are the other guys doing? Okay, you can put down your hands. My next question to you is this. The next question comes up here. How many of you have used UPI, GPay, or Paytm in the last week? So many. Wonderful. Wonderful. You can put your hands down. Yeah, let's focus here, because what I'm going to talk to you about and what you're going to listen is really about something that's going to happen in the next 5 years. It's not going to take more than that. And cash as a commodity, the currency that you carry with you, the paper money that you have in your wallet, that's going to disappear. I'll go back in time. I'll go back by 10 years. I'll go back to the year 2014. I'll go back to the year 2014. I spoke at, I think, Cochin, Ernakulam, at the Kerala Management Association. And I then said two things. I said three things. Two of those three things, one of those three things has already happened. I talked about the need for demonetization in our country. The second thing that I talked about, demonetization of course has happened. Second thing that I talked about was whether cash as a currency will disappear, and that's now going to happen in the next 5 years. It's already half happened. And the third one is not relevant to this gathering at this point in time. What you are already seeing, the usage of GPay, the usage of Paytm, the usage of UPI is a trailer to the disappearance of cash. Many of you did not put up your hand when I asked you how much money you have in your pocket. I travel extensively across the country. I don't carry a wallet with me. I don't have a purse with me even now. Largely because the world is increasingly moving to electronic payment. But electronic payment is only the trailer. It's only the beginning of a story of transformation that's going to see remarkable change. I'll give you one example of the kind of change. But a little before telling that, I want to tell you that we are right now, right at this point in time, in the midst of a huge financial revolution that's taking place. And like I said earlier, in the space of the next 4 or 5 years, you will see the biggest revolution happen where money is no longer there. And for a generation like mine, which went to the bank to draw money, to a generation like yours, which never went to a bank, never went to the inside of a bank, rather drew money from ATMs, to a generation today which uses only the UPI, there will emerge a generation tomorrow, the generation born 2010, 12, the alpha generation as it is called, which will not even use cash. It'll use something, it'll not even use UPI. What you're seeing now, what you're doing now, it would not even use that. It will use something called CBDC, Central Bank Digital Currency, and that's what I'm going to talk to you about, okay? I just want to take your mind back again to a little while long back. You possibly were very, very, very young. Sometime in 2011, 12, was when Google Maps came. How many of you use Google Maps? Most of us use Google Maps, good. I've come this side, Mylapore, last 15 years or little more than that, virtually every second day, but I still use the Google Map today to come. That's primarily because we've all got used to it. I'll tell you a story. When the maps first came, I fitted the map to my car, and in front of Hotel Savera, that was the time when the flyover was built, okay? And the maps told me to go straight, so I went straight up. Right at the top of the flyover, the map said turn right. Now, if I had turned right, I wouldn't have been left behind. I wouldn't be there here today. From that point in time, when it was so horribly bad, to today, when you can blindfold believe the Google map across the length and breadth of India, we have come a long way. And that's exactly what is also going to happen to cash. This is how money evolved. A little bit of history is important. A little bit of history is important because we need to realize, understand, and appreciate that man has always evolved at the most crucial of times. When the history of the modern world, for example, is written, people will write with a great element of pride that the population that is now living, the 9 billion plus, was the population that fought something like COVID, which was completely unheard of. So what I'm trying to say is that man has always evolved, money has evolved with man. I'll very quickly walk you through that, although it might look like an economics 101 class, but nevertheless, it all started with barter, where I wanted wheat, you wanted rice, so I gave you rice, I took wheat. That was good. But what happened if you did not need rice? And that is when coins came in. The world introduced the idea of coins. So I give you one product, you instead give me coins. But then carrying coins was difficult. How much coins can you carry in your pocket? Suppose you wanted to buy a cow, or you wanted to buy a horse, or you wanted to buy a home, how much coins can you carry? That's when paper came in. That's when paper money, the kind of money that you and I today use or were using until the other year, what is called fiat money, came to be used. You know something very interesting about this paper money? That 100 rupee note, how do you know it is 100 rupee? How do you know its value is 100 rupees? How do you know? Because it is written on top of that. How do you know it is 500 rupees? Because it is written on top of that. On the sheet of paper that you guys have now, if you write 500, will it be valued 500? No. In other words, paper money has no intrinsic value. Its value arises only because we trust. We trust that the government of the country, when it comes down to that, when you hand over the money to the government, they'll give you 500. If a product equivalent to value of 500. That is how paper money came in. And then paper became hard to carry. That's where cards stepped in. Not only was paper hard to carry, it was also important that you did not have money and still wanted to buy products, which is where credit came. That's where credit cards arrived. And then the 2010s or so, the digital cards came, where you carried a prepaid card or a prepaid wallet, what you call the debit cards. That is how things progressed. At each stage, moving from barter to coins, to paper, to cards, to digitals, things became easier. Each brought us closer to ease, and today, right now, the easiest way of paying is UPI. Today, everybody and his uncle has a mobile in his hand. The greatest revolution that I think that has happened in the last 10 years in our country, of which we can all be proud of, is UPI. Not even in the country that he was earlier talking about, the United States of America, is the UPI used to the kind of extent that we use in our country today. You can make, as you know, online payments or UPI payments or GPay payments to the vendor on the street. You can make it to the flower lady. So you can do anything, and that's where we are. But But like I told you, this is also going to change. And this is the change that we are going to see. In all the things that is happening now, in all the transactions that is happening now, including UPI, those are the three problems. A, there can be delay due to intermediaries. That we don't see delays today is because we have a very, very, very strong network of the internet. A second thing is that if you make payments across countries, the fees are high. The cross-border fees is high. And what is also important is that there was a time when the government of India said that it wants to even charge people who make UPI payments. Wisdom prevailed on them, they did not do that. The third thing is that to make UPI payments or make GPay, Google payments, you need the banking system. You have to have a bank account. The person to whom you are making payment, he has to have a bank account. And therefore you have an intermediary called the banker. Now comes the most important thing. If you have digital currency, the one that we are talking about, CBDC, I'm not talking about the mobile payment, which is also in a very rich form digital, but I'm talking about CBDC that's set to come anytime. There are already 3 countries in the world that have CBDC. Bahama is one, Jamaica is second, I think Nigeria is the third. There are lots of other countries which are ready to roll out CBDC. The Chinese yuan is one, American dollar is another, India's digital rupee is a third, and it's only a matter of time before this comes in. Digital currency could solve all these problems. It could solve the problem of delays due to intermediaries. It could solve the problem of high cross-border payments, and it could also solve banking system dependencies. You are with me till now? I'll very quickly summarize what I have told you so far. I told you that we are already in the midst of the revolution because there are many of you people here who don't use cash as in currency because many of you told me that you make mobile payments. Then I said that the world has gone through various stages of the evolution of money. Today we are sitting on, we moved from, what was that, barter, to coins, to paper, to gold, to credit cards, to digital cards. And that we are now rich in making UPI payments. I also told you what are the challenges, and to overcome these challenges, the government is talking about digital currency or CBDC. But before I tell you about CBDC, for you to understand CBDC, it's important to look at that man. Is that a man or a woman? Sure? Sure. Okay. His name is Satoshi Nakamoto, or at least the Wikipedia, the internet says that man is Satoshi Nakamoto. There are lots of speculation in the world because nobody has seen him. If you look at Wikipedia, if you do a chat GPT, you will find that it would say that nobody really knows who this Satoshi is, whether a man, whether a woman, or whether a group of person. But this person was the one who created Bitcoin in 2008. And Bitcoin is at the base of making CBDC. Okay? I know it's heavy stuff, so I'll try to keep it simple. Bitcoin works with something called blockchain. I'll explain to you what that is as well in very simple language, and then we'll understand how this process is. Sometime in 2009, 9, when Bitcoin first came, okay, a transaction was done to buy 2 pizzas. You eat pizzas at 10,000 BTC. BTC is Bitcoin currency. Today, the value of those 10,000 Bitcoins is $600 million. Those Bitcoins are traded in the market as an investment. Today, it's $600 million, which means the guy who paid for his pizza with 10,000 Bitcoins possibly made the costliest purchase ever. I wanted you to know about Satoshi Nakamoto because he was the one who brought in Bitcoin, and Bitcoin is at the basis of the things that we are going to see now. Yeah. Let me explain this a little clearer. Bitcoin is, do you know who creates these paper currencies? The currencies that you have? The government, the Reserve Bank of India prints paper currencies if there is a need. Bitcoins are not printed by the government. Bitcoin, I don't want to make it complicated, so I'll put it very simply. There are 21 billion value of Bitcoins, and these Bitcoins are created through a very complex math algorithm. Okay? The trouble is that nobody has control over these Bitcoins. You can create, if you reach that level of math skill, there is no government that is involved. It is therefore completely decentralized. And the governments of the world said, look, this is something that we should not allow to handle, because if this comes or if this happens, all the currencies in the world will one bright morning disappear. At the same time, the governments of the world realized that the use of blockchain is something that is landmark. Use of blockchain is something that's very, very important and good. And therefore, the government said that we will come out with our own digital currency. To put it in very crude terms, to put it in very simple language, Bitcoin is a currency which is decentralized. It's a currency over which the government has no control. Whereas CBDC is the currency that is created by the central banks, which means the Reserve Bank of India in the case of India, and any of the many central banks in other countries. And while the first one is more for investment, because you cannot carry a Bitcoin and go and buy pizza in the market because no one is going to take. But the day we have CBDC, you can take it to the market, pay the tea fellow with that, and buy a cup of tea, buy pizza, whatever. Okay? Now that is how CBDC came. But there's still a long way to go. So I'll move on to try explain to you what it is. The principal difference between the two is that the CBDC is backed by the government and is regulated by the government, and therefore it is far, far more reliable. Okay? In simpler language, both of them are technically currencies. The Bitcoin is a currency largely meant for investment, whereas the CBDC is a currency that is meant to replace your physical cash. A question that arises, at least that came up to my mind some months back when CBDC was getting launched, was, we have UPI. Why do we need a CBDC? The answer to that is very simple. UPI is a payment method. UPI is not a currency. When you do Google Pay, it's a method of paying. Google Pay is not a currency. Whereas CBDC is a currency. When you pay with CBDC, you pay with a currency. And while UPI needs banks, I explained that earlier, CBDC does not require banks, does not require intermediaries. There is also talk that CBDC might not need the internet to transact. Now, those of you who have used a wallet for payment, a currency wallet, where it's preloaded, a gift that is preloaded and given to you, you then go to Amazon or go to wherever and use that to buy. That's close to CBDC. That's not CBDC per se, but for you to understand and appreciate, you can think of it that way. Okay? I'll move on. I think I have explained this. So there is no need to go there. Now, the quick point that we need to understand is CBDC cash? Is it currency? Is it something that we keep in our pocket? The answer is yes and no. It's no in the sense it's not physical. Like I said earlier, it's like a card. Okay? You can transact, and the minute you transact, the CBDC digital rupee gets transferred from your account to another guy's account. It's a way to access. You could have it as a digital wallet, which is what is most likely to happen. It could also be a banking app, less likely to happen because the whole idea is to knock the banking system intermediary out of this transaction. It can also be a smart card of the variety that I explained to you a little while earlier. Okay? So this is how it works. So if you ask me why do we need this, for that I need to tell you the story of the blockchain. And to understand the story of the blockchain, I'll come back to this. I want you to look at this. Let's say 5 of you or 7 of you or hundreds of you decide to go for a picnic or decide to go on a trip. Now, when you go on a trip, how is money spent? When, let's say, 10 of you go on a trip, how is money spent? How do you spend money? Who spends the money? Everyone. Everyone will share, but everyone does not spend. Maybe at the point of spending, one person spends. Maybe he keeps a record. At the end of the trip, on some pre-agreed basis, the money spent is shared by all of you. Now, how do you know what has been recorded is right? Do all of you keep track of the money spent? We don't. We trust one person, like we trust the government of India. We trust one person who spends and records. And at the end of it, he comes and says, hey, 10,000 rupees has been spent. There are 10 of us, let's each pay 1,000. We do not know whether he has kept the record right. We do not know whether he has changed numbers in between after spending. We don't know that. That is where something like blockchain comes in. When blockchain comes in, it is something like everyone maintaining records. All of you, assume a situation where all 10 of you maintain the records. And assume a situation where I, one of the 10, tell you, no, I did not spend 30, I spent 300, so let me go and correct my book. When I correct my book, all 10 of you will have to correct your books. If all 10 of you decide to correct your books, which means that nobody can change the books without everybody is okay, we are sitting something on blockchain. That's a very, very crude and very simple way of putting across what blockchain is. Therefore, blockchain is one where you cannot fudge things. If anybody makes a change, everybody in the system has to change it, or everybody in the system will come to know about it. Okay? That is the reason why this Bitcoin based on blockchains became popular. Take another example. This is the second example. Very similar to the example that I gave you earlier. Or take a third example where 10 of you work on a project in the college and you make notes. As soon as you make notes, everybody's books gets updated. Now that is exactly what is going to happen in a blockchain environment. So I go back. I want to now summarize what I said. That's why I'm putting it out there. I said that Bitcoin, another word for that is cryptocurrency. Cryptocurrency is the most popular. Bitcoin is decentralized, whereas CBDC is centralized. That means the control is with the Reserve Bank of India. The supply of Bitcoins is limited. I told you about 21 billion US dollars, whereas this is unlimited, just like paper money, the government can create more. First one is unregulated, the second one is legal, stable, and we are very soon going to come in there. Okay? I'll now move on to the last phase of what I wanted to talk to you. What does this mean to all of us? When CBDC comes 5 years from now, 10 years from now, when cash disappears, what does it mean to us? First thing it means is that currency becomes cheaper, transactions take place faster, and anybody and everybody can use it. That's the biggest thing. The very last thing that I wanted to ask you is, will cash disappear? Because ultimately, we all think money means cash. Okay? Money technically does not mean cash. If you ask what is the total money available in the world, it's not just that 30 trillion rupees that the Indian government has in terms of cash. Even credit card is money. Okay? Promissory notes are money. So there are different forms of money, and digital will become another form of money. And when digital comes, the paper money that we are going to use, which is what we loosely call cash, is going to disappear. Okay? Last thing that all of us need to understand is whether the arrival of digital currency can be looked upon as an opportunity or can it be looked upon as a risk. There is always a risk with anything that you deal with which you don't know, which is unknown. The risk of darkness, the risk of fear is always there when you deal with something that's unknown. At the same time, something like CBDC provides enormous opportunity because monies move faster. And you don't have to carry huge amounts of cash with you. You don't have to rely on banks. And therefore, it's a product or an idea whose time has come. I'll quickly summarize what I said and then we'll close out. In the second half, after I did the first summary, I said that there is CBDC, there is also the Bitcoin. Bitcoin is the forerunner to CBDC. Bitcoin was started by Satoshi, and I also said that both of them are based on a principle called blockchain. Those of you who are more interested in that, you could go back, look at Wiki, or more importantly today, look at ChatGPT, get some stronger, meaning those of you who think that this is an idea which you must experiment can do that. And therefore, whether it is risk or not, the popular sense or feel in the world is that this is an idea whose time has come, and this is something that you're going to see before very long. Thank you very much for your attention.